And start us back with that slide. Thank you for joining us. United Policyholders, we're a national nonprofit. We've been working in this space for 32 years. We're funded exclusively by donations and grants, and we are that information resource and voice for insurance consumers in all 50 states. We are made up of a small but mighty team of professional staff, and then government and nonprofit partners, and then volunteers such as our fired up survivors and our consumer focused professionals like Helmut, who is joining us today to help provide this educational webinar for you. We have 3 programs: the Roadmap to Recovery, which is what you're joining us for today. Our Roadmap to Preparedness is where we take those lessons learned of what people wish they had known prior to a loss to make sure people in the future are better protected. And then our Advocacy and Action is where we fight for those pain points people experience on the road to recovery to improve the safeguards for consumers through regulations and protections in the future. I'm not sure which disasters people are joining us from today, so this site will take you to our disaster insurance help libraries. We've got very state-specific resources for you. You can sign up to receive emails for events such as this webinar. We've got our professional help directory where you can find people to help you with your claims, sample letters, claims forms, our Survivor Speak series, and then more information about events as well. If you are a Marshall Fire survivor, we just want to remind you our survey for the 1-year survey is going to be closing soon. Please, please, please help us be an even more effective advocate for your community and fair insurance practices and complete our survey. Reminder, only complete it 1 time. And this is the link for that. Fine print, this workshop is intended to be general guidance only. We are not providing legal or professional advice. Our speakers are volunteering their time. And let me see what we've got here. And then today's presenters, my name is Valerie Brown. I'm the Deputy Executive Director of United Policyholders. With us, we have Helmut Munt with Builders Risk Insurance HBA program. I'll let him explain that acronym in a minute. We also are joined today by Annie Barber, our Roadmap to Recovery Coordinator and a 2017 Tubbs Fire survivor, and also Lisa Hughes, who is our Marshall Fire local liaison and a Marshall Fire survivor. Our goal of today's presentation is just basically to understand what builders risk and of course construction insurance is and why it matters. These are some of the questions we're going to talk about. And let me go to the next slide. And Annie, I'm going to let you narrate more of our conversation with Emmett, if you are okay with that.
Absolutely. So Helmut's going to try to help us explain and understand this so that you don't have to be a builder or somebody in a professional world who is diving into this with all the unknowns. So Helmut, when do I need this type of additional insurance protection?
Okay, builder's risk insurance is basically, it's your perils coverage, your natural perils, fire, windstorm, normally everything with the exclusion of flood and volcanic eruption, which is normal. Some policies allow you to endorse that coverage, some don't. You got to check with the specific carrier. But it's basically your property coverage while your home is under the course of construction. So do it from, if you're totally rebuilding it or if you're doing renovations or remodels. If your home has been totally destroyed, it's probably a little cleaner because then it's a new construction policy, basically. On a renovation, it's a little more complicated because it ties in, you have existing structure value and then your renovation value. With most policies, if your house you're being renovated and it's not inhabited, you've lost your homeowner's insurance, you're going to need, and let's say if you had $1 million house and you have $400,000 of structure still standing, you'd have $400,000 of existing structure coverage that you would purchase, and then $600,000 of renovation or remodel. And they separate the two, one, because the existing structure is always going to, on a lost payment, if something were to happen again, while under the course of construction or repair, that existing structure is going to be rated at an ACV, which is actual cash value. And all that means it's depreciated value. And the new remodel renovation is replacement cost, which is what it costs to put it on the ground. That's new. There's no depreciation to it. So it's your actual cost. If you spend $150,000 on lumber and you got the receipt and it's burns again, you're going to get $150,000 in lumber replacement. You know, on the existing structure, they would, well, how long did you live there? What's the existing, you know, and they would settle that on the ACV basis. But then once the remodel was complete, if something were to happen, if you're still sitting on it before you get the homeowners, things like that, the whole thing would replace the replacement cost, because here again, it's all been brought up to standard.
Next slide. Why do I still need to insure my property? This is a common question. If you have builder's risk, why do you need a liability policy?
Okay, so you had your homeowner's policy, your home has been destroyed, you've got a slab out there, it's been, you know, you demoed all the structure off except for your slab. You still own the property and you still own that slab, you still could be held liable for anybody walking on that property. Your homeowners provide you liability insurance for that property. So if your homeowner's carrier, if you drop the policy or they drop you, you can only buy in a surplus market, you know, just a straight liability policy to cover, you know, that property, that location. It's not giving you coverage for construction, but you're strictly buying it for the land and the foundation if anybody were to go in there. The builder's risk is strictly property coverage. Builder's risk gives you no liability protection. So if you have no, right, if you have no home, you got to make sure you maintain a liability policy, because anybody walking out there and they trip and fall, and you could have signs up, no trespassing, whatever. If they fall on your land, you're responsible.
Thank you. How do I protect myself from liability and theft during construction?
The liability here, again, you have to have a liability policy. On your builder's risk will normally cover if you insured, let's say your home is $1 million and you insure for $1 million, you're going to have a sublimit in there for materials stored on site. And you can normally pick, most policies will start at about 25,000 and you can run it up to 100,000 or higher. It depends on, you know, the house, the value, how much construction material is going to be on site. And that wouldn't cover theft during construction of any material that's being used in the house. So your house may be framed up, you have your garage doors in, your windows, and all your appliances are in the house, but they're not installed, and they're sitting in the garage. The garage is locked, and someone, it happens a lot. They, you know, get into the house and they relieve you of all your appliances. I've had, you know, I just had a recent builder where they went in and stole 23 window packages. Yes.
And how does the umbrella policy work with this, or does it?
It would not really go over the builder's risk. Your umbrella is excess liability. So if you normal homeowners policies, you can go, most people are going to get like a 300,000 liability limit, and that is up to that limit. That's what an insurance company is obligated to spend on defense or settlement. Sometimes you can get $500,000. Sometimes a carrier will give you $1 million. And all the excess does is allow you to buy over that, you know, that you have on your house. And an umbrella policy will normally extend. They're gonna, you know, it extend over the liability of the house. If you have, excuse me, automobiles, it's going to extend over that liability. Boats, RVs, any equipment that you're operating that has liability limits, if you list that with your umbrella, they'll charge you, but you can, and that's why they call it an umbrella. It's a liability policy that goes over all your exposure. A lot of people here, again, if you have a value, you know, a lot of values or assets, you know, a normal homeowner's policy, 300,000 is not adequate. You may have trust, you know, set up for your children or grandchildren, and all, you know, trust can be attacked. So you can actually, you know, you want to protect your assets, what you're worth. So, you know, I have clients that'll have a $5 million umbrella, $10, $50 million umbrella. You know, a
doesn't-
lot of,
It doesn't really cover any part of the builder's risk then.
no, builders are strictly property. And anytime you think of liability, the easiest way to think of it is third-party litigation. You're being sued. And that's where liability comes in to protect you. Builder's risk is property insurance, and that's your direct physical loss.
Thank you. So what do I need to know now? Who takes the policy out? How long should the policy be for? And what are the pros or cons of extending the policy? Could you cover all of that?
Okay. And who takes the policy out when you're ready to start course of construction? And basically what I normally do, I do a lot of programs with builders, and that's what the Builders Risk HVA program is. I work with Home Builder Association builders. Builders Risk can get through multiple carriers all over the place. You know, I can give you the names of some of the big ones: U.S. Assure, which is the old Zurich, Liberty Mutual, Bankers, Axis, which is our program. So there's a lot of different carriers, and normally your independent insurance agent has access to all those markets, or State Farm. If you have State Farm out there, State Farm will write a builder's risk in many cases. You know, if they have the homeowners insurance, you're doing renovations, you can, you know, direct from them as a builder's risk. But the builder's risk, it's on what they call an inland marine form. So it just has a lot of coverages and extensions that your normal policy doesn't. And that's like, you know, property stored on site, property off site. You may have stuff located off site, so you can extend coverage to that. Or a normal homeowner's policy is not going to give that to you. So that's kind of the advantage. When you start framing up, coming off your slab and start building, you want your policy in force. A normal policy, what's normal? New construction, most of the time they do a 12-month policy. Like in my program, I have a 5-month, I do a 5-month policy and then do month to month. And that was really designed for builders that are doing faster turnarounds, or I use it a lot with remodelers because a renovation may not take a full year. It may be a 3-month project. But I mean, you renovate your kitchen nowadays or a bathroom, you're talking $75,000 to $100,000. And a lot of times your homeowners policies won't cover renovations. So you have to get with your homeowner carrier to see if they cover that. And then if they don't, then you want to buy that coverage. The choice between the homeowner securing it and the builder, it really depends on, you know, working with the contractor. From my standpoint in my program, I recommend my builders that they control the insurance, because that way they know it's enforced. It's easier for them in our program to do extensions, things like that. It's because we built it around the builders. As a homeowner, a lot of times, you know, if you go into the bank and you're getting a loan to rebuild a house, the banks will sell you like a policy from Zurich. A lot of them use U.S. Assure, and they'll tie that, you know, they can tie it right into your mortgage. The thing you want to watch is the length of time for the policy. Like I said, normal. If you buy a 12-month policy, and the problem is what happens when it goes over. You know, after 12 months, it's not completed and they cancel your policy, you're not going to get another builder's risk company to pick up the exposure at that time. So you're the carrier that you wrote it with, you have to find out up front, are they willing to extend it, or will they guarantee me a renewal? And then you want to ask what the minimum premiums are. So let's say if it goes 18 months and you had a 12-month policy, you wanted to extend it, they say, okay, we'll extend it for 12. Well, now you got 24, you done in 18. So you got a 6-month where you don't have the coverage, because once you move back in your house, the coverage no longer exists. That's one of the triggers on builder's risk. Once you put to intended use, the coverage ceases and ends. So you got to have your homeowners back. So you want to make sure you can flip back. And I think State Farm does a pretty good job too. Like if you have the builder's risk and expires, they will roll that premium back into your homeowner so you don't lose it. They don't refund it, but they roll it back into the homeowner's policy. So it's really having that discussion with your insurance agent to see what happens.
Just to kind of recap a little bit. So who takes out the policy? Normally you prefer that the builder does because he sets the limits?
Well, if I'm talking to the builder, he knows the limits and then he has control of the policy. From the builder's,
how much he can put on the lot also.
Correct. He knows what is there. He knows what his storage limits are. I'd sell it to the builder in the sense, because one, if there's another loss while he's doing this project, he knows he's going to get paid. A lot of times with draws, if the builder's up to date, but if you're behind on draws and something happens, and we've had clients when they have the insurance that said, oh, well, we're not going to, there's a draw that wasn't settled and they don't want to pay, then they have litigation. And there's only one party that normally wins in litigation, and it's not the plaintiff or the defendant.
Okay, and
So
length of the policy is important because you'd rather have too much than
yeah,
not enough.
not enough. So when you write a builder's risk, and that's when it's really sitting down with the contractor and say, okay, well, how long is this thing going to take? I can have it done in 8 months or 12 months. If a builder says I'm looking at 16 months, what I do with my policy is, okay, I'll write it for 18 months or even 24. And like the first 12 months would be, there's no refund if you got done sooner. But let's say, so I did a 2-year policy, we finished in 18 months. They have a minimum earned premium, and then we cancel early. They would do a pro rata cancellation and return the unused premium back to whoever, if it's the builder or the homeowner that brought the policy. So you just want to ask those questions before you buy the policy, because it's critical. You don't want to pay for what you're not getting. And you want to make sure that you have the option to extend it, especially in today's market with supply chain issues. I do have builders where, what normally you could order doors and windows and get them in a week. And now they talk 3 months, 4 months. You get into kitchen cabinets, things like that. It may extend you 2-3 months. And so it stops the builder. So, all of a sudden now you're 3 or 4 months further in, and that clock is running. So you want to have the option to extend it or make sure you're covered on the backside, for the period of time. If the house on a renovation and with fire damage, and here again, or floods or things like that, some of the carriers, if you're rebuilding, they're going to want an engineer's report for the structural integrity of the remaining structure. Zurich is very much into that. If you do a renovation policy, 9 out of 10 times, I know they do it down here in Louisiana with storm damage, is they want an engineer's report to make sure that what they're tying into is solid. And especially the carriers are leery of fire damage because you're not sure the supporting structure has the strength and integrity. They want to make sure that what you're tying into is going to be there, because if it starts going in, all of a sudden it collapses. If it was a 2-story house and you're going up and the wood was damaged and it wasn't changed out, they're on the loss for the whole deal. So they really, most of them are going to want some kind of engineer's report, and that can run anywhere from $200 to $500 to have a structural engineer report done for the structure. But a lot of times, like Zurich will require that before they do a renovation policy.
So that just ties into, when you've gotten your policy, be sure to read your policy and understand the nuance of your policy.
Correct.
Yeah, we're going to do a little deeper dive into the builder's risk here specifically. And Helmut, if we've already covered a question, unless you've got something to add, just we'll keep going. But Annie, I'll turn it over to you.
So we've kind of covered what is a builder's risk insurance, and we've covered what it covers. Acts of nature and theft of any components that are used to build your house. We've covered, does it also cover liability for the builder and subs, which we now know it does not. The builder and the subs should have their own. Something that I'd like you to touch base on, Helmut, if you don't mind, is the example of the cabinets. If you've ordered cabinets and they're completed, but they're not delivered, who owns those?
Well, if you ordered them and they're completed and the millwright has them, he says, okay, your cabinets are ready, come pick them up, and the builder doesn't pick them up. And let's say the cabinet place burns to the ground. That's not property of the cabinet manufacturer, that's your property. So you want to make sure that you have coverage, either side. And that's why a lot of times I like working with the builder side, because the builder is going to know, okay, the cabinet maker, if they have bailey coverage, which is coverage for property that is under their care, custody, control, or you have the extension of property being stored off-site, and that would be considered, because that millwright's just holding it basically in storage. So with a builder's risk policy, you would have coverage for that.
So whether
and that's one of the things you want to make sure
Yeah.
It's not one of those little fine print exclusions in your policy.
So whether you paid for those cabinets yet or not, once he
Right.
calls you and tells you they're ready, they are technically yours and would be
They-
covered under the builder's risk.
Right,
Correct.
and that, in the example on the screen now, it's the has been installed or is to be installed.
Correct.
All right, and let me go to the next slide, which is what's typically not covered.
Yeah.
So the property not covered is existing buildings or structures, plans, blueprints, designs, or specifications, except as provided in paragraph A4. Land and water, existing inventory unless specifically endorsed. And then the contractor's tools, equipment, whatever they're bringing in as part of this is on the contractor. And then any vegetation on the outside.
Yeah, they're not gonna cover that. Not, you know, on a typical homeowners, you're not gonna get the trees and the shrubs. You can sometimes with commercial, and that's one of those negotiable. Almost anything that's excluded can be negotiated if you're willing to pay.
Thank
That's the wonderful thing about insurance. They're always open. And, you know, the key there with, you know, and it says property not covered is existing buildings or structures. So that if you're doing a renovation, what, you know, the example we used before is $500,000 is left standing, you're gonna do a $500,000 renovation. You know, you have to make sure, if you just say, I want a remodeler's policy, I'm doing a renovation and my renovation is 500,000. And you just buy 500,000, well, that whole thing burns. Who's got the 500,000 of the existing structure? So, and that is existing structure coverage. You want to make sure that your policy allows for that and that it's listed as that. Because here again, it's paid differently. Here again, we're back to the depreciated value as opposed to replacement cost. But that's where you're going to get the coverage for the structure that you have left.
Great. So how long are you covered? We kind of covered part of this, but it's basically from the start of the reconstruction or the remodel until completion, if you put that amount of time on it. So it's
Right.
all dependent on what the policy is.
Well, at that time. Now, what was ended in most cases is once the property is put back to its intended use, builder's risk coverage disappears. All right, and so what you want to watch too, like, you know, if the builder has it, if the builder abandons the project, which is they just stop doing it, you know, and it goes vacant, the company's not going to allow, it's not going to stay on builder's risk. Once they find out the builder's abandoned a project or it's ended, he's walked away from it, he's no longer the contractor, coverage ends. So
Is that true even if the homeowner takes out the policy?
Okay, if the homeowner takes out the policy, it's in the homeowner's name. So
Yeah.
he basically has that coverage until it's put back to intended use. But clarify with your carrier what their trigger points are. The biggest trigger, like I said, is put to its intended use, a project abandoned, you know, given up, or they, you know, if the builder has a policy and they don't pay the premium, there's no coverage.
Yep. Okay. Thank you. What does it cost? So we have a couple of examples here. One is a policy in Colorado, and the other one is a volunteer build, and you will see a huge difference in the prices. The first one was about $2,200, and which may seem like a lot, but you are insuring your most valuable asset for most people. And then the other one's a voluntary build that comes in quite a bit less. It's about $350. And, you know, understand the voluntary builds cost less because the labor is not part of it. But so they are simply, and they probably buy this a little bit more in bulk. I don't know if you get a discount for that helmet.
You know, not really. I mean, because they're going to look at project per project, and because builder's risk, when they rate it, they normally, it's really based on a 12-month policy, and they know like what builder's risk. So if it's $1 million house, for the first 6 months, there's very little coverage exposure. You know, that $1 million value is at the end. So month one may only be 25,000, and then it starts growing incrementally. The basic exposure is from month 6 to 12 as you start nearing completion. And that's why it's one of the main reasons why it's hard to get extensions, because once you hit 12 months, you're probably at 90% of value of the house.
Yeah.
So the premium they're going to want to get, because now you've got a full $1 million exposure. Where back when you first started, you only look at that limit for maybe 2 months. So now you're picking up a bigger window. So it depends how long you want to extend it. Sometimes it will charge you more on an extension. So that's why I say a lot of times I would rather buy more time on the front side
Mm-hmm.
and then get return of premium. Know that I have a minimum earned premium and they would prorate cancel back
That's
to come out cheaper or less expensive.
Or
that
like
way.
you mentioned earlier, knowing that you have the right to renew, right?
Right. And see if, and you can always try to lock down at the same rate, ask them. Because sometimes, I mean, I've seen with some policies, oh yeah, we'll renew it, but they're not going to give you the rate. And then if they had rate increases and things like that, they're going to attack you with that new rate. So you're rolling dice. At the end of 12, you don't know what's going to happen.
Right.
So
And just the comment on the pricing for the nonprofit is that is all volunteer labor. So the materials all in is about 100,000. That's one of the reasons why that is so low. It's a bare bones house. So it's very minimal materials.
Right. You're basically, if something happens to the house, it's not covering your labor or anything. It's just your material cost.
got it.
Yeah. Because I mean, the rates are normally based, it's a rate what they charge based on location and per $100 of value of the structure.
So Helmut and I went over this a little bit about whether your homeowner's insurance would write a builder's risk policy. And the answer was it varies and it depends on how big the disaster is around you and whether the company you were with had a lot of loss in that. What's the difference between total loss versus partial loss on that, Helmut?
On a total, well, here again for, builder's risk, most carriers are going to prefer if it was a total loss, because then they're building from the slab up. And most of them are fine with that. The partial loss is where you start getting into tie-ins of old structures. So they're a little bit more picky on that. They want to know that what's the ratio of the existing structure to the renovation. Like if you want to insure $800,000 of existing, you only do 100,000 renovation, it's going to be very hard to find coverage. They'll normally go to like a 60-40 split, 60 on existing, 40 on renovation. But if you're doing an 80-20, most carriers are going to say no, because it's too high of an exposure right off the bat for the premium what they're getting.
Got it.
So you really got, and it's looking at each individual case, and you got to talk with your agent and just really walk it through. What
I'm sorry.
No.
You can't get a policy. You said that there are some more the higher risk policies. Maybe it may cost a little bit more, but there's some markets out there that could cover you if you can't find this
right. And that's going into what they call the surplus market, which is Lloyd's of London. Most of your independent agents have access to, and you end up having to go through a broker, which will go to a Lloyd's contract, a syndicate, and you can shop it, and they'll pick up the exposures that the normal carriers don't want because it doesn't fit their model.
Yeah.
So, for the base rate. So they, with the Lloyd syndicate, they can look at the individual risk, decide if they want it or not. Are they going to get a premium for it? And they'll just write it. They don't have a set. They can basically charge whatever they want.
Okay.
So you build your own policy. There's pluses and minuses to it.
So, Helen, I know I had put in the chat that we were going to take the Q&A at the end, but because this is a little bit more deeper on umbrella policy, we do have 2 questions in the Q&A that I want to bring up during this time. So Annie, I'm going to go ahead and flip to this, and then if you'll get us going, I'll ask the questions before we get to the end of this.
Okay. So what about adding an umbrella policy? What will that do for you? And if you don't have liability, or you have if you don't have liability on your property. Will the umbrella kick in, and at what point will it kick in?
If you let your homeowners go back, and let's say you had a umbrella policy, a $5 million umbrella policy, and your homeowners is gone, your umbrella policy will normally be what they call a follow form. It follows the form of the liability. If you don't have that, so on your homeowners, if you had a $500,000 liability limit in your umbrella, they use that 500 as a self-insured retention value. So they're only going to pay once you exceed 500,000. If you have liability, they still got to prove that you're at fault.
Yeah.
That you were negligent. So not having that homeowner's 500,000 liability means it's coming out of your pocket.
So in
that
that,
self-insured retention of the umbrella.
right, and so Hemant, so one of the questions, Naret's, is if you're renting a home or have a second home and have home insurance liability on that home, would it carry over on the home being rebuilt? Would you be able to apply that?
You have to ask your agent if you can endorse that other alternate location to the existing policy.
Got it. And then Sarah had asked, she said her contractor has a builder's risk policy, but SBA is saying they need liability. She wants to know how, basically what's it called and how to get it. Her agent had said their renter's insurance on their temporary home would cover it, but it doesn't.
Right. No, well, if she's the SBA wants a liability from the contractor.
No, liability for non-construction issues on the
For
property.
non-construction. Yeah, that's getting a general liability policy. Like I said, you don't have, you can buy that separate for land under development. And it's not that expensive because you don't have anything going on. It would exclude any construction or development of that land. All you're looking for, so it'd be, if even while under construction, if someone was walking around the house looking at it and they trip and fall on the ground, it's not a fault of the contractor. They just tripped over some underbrush. Then they're going to come after you on your liability. I mean, reality is they would file suit. They would name you the property owner. They're going to sue the contractor. They're going to name anybody that's around there. And then, so you have to start getting defended and try, if it's not your fault, if it was a construction issue, that it goes on the contractor's policy. Contractors go, well, it's not it's common ground. They're going to be diverting it to you. So, the problem is that while they're deciding who's at fault and who's responsible, the meter's running. Yeah. So all the legal costs, it's, and that's the biggest thing with liability. I tell people, it's not just settlement, it's defense costs. That's, you can burn $100,000 on legal fees really quick. So unless you're an attorney and going to defend yourself, liability insurance is a good risk transfer tool.
And
I can one more question on this specific piece before we address the next slide. So if your original insurance company refuses to write the builder's risk policy, does it make sense to retain the liability policy under your insurer if possible, or move that liability to the underwriter who's doing your builder's risk?
It may be two separate markets. So I would ask, the homeowners, like saying, okay, there's no structure, and ask them, are you willing to, carry the liability? And most of the time they're going to tell you no. And then you're going to just have to ask your agent. And here again, it's probably going to be an independent agent that has access to surplus markets where they can just pick up a liability policy for you. And then they just get to rate it off the size of the lot.
Does it make a difference in whether your insurance company that you had with the loss, if you keep the liability with them, are they more apt to insure you when you have your complete home again?
They might, if you can keep the policy. And like I said, that's, if you had a State Farm, let's say State Farm, okay, or we don't want to do the builder's risk, well, will you stay on the policy with the liability only while the house is under construction? So I can go back to a homeowner's policy in HO3. And it depends a lot on the carrier, because the carrier may not want to stay in the area. They may just be going, we're done writing here. We're gonna, there's no structure. We can't, we paid out, policies over. They don't want any exposures because they're trying to get out of there. So they got to evacuate. So here again, you're going to be forced to find that liability coverage with another carrier. But that's it, so if you're using a captive agency, Allstate, and that is where these companies have their own agents that represent them. Allstate, State Farm, Liberty Mutual, those are all captives, An independent agent, they represent a multitude of companies,
Mhm.
you know, so they're not limited just to their own in-house. We can go to brokers and research the market.
Thanks for explaining that piece. So
Yes.
we've kind of already gone through this with, am I responsible for my contractor's tools? That will not be covered. He's responsible for his own, and he's responsible to have his own equipment floater.
Correct.
Whatever it is that he needs to cover himself.
Right. And then here again, I'm just, you know, as you work, if you're working with a contract or whatever, make sure you get copies of their general liability and the workers' comp. And as the homeowner, you want to be named on their policies as additional insureds. Please, please, please get covered.
And why do you want to be named?
You want to be named because here again, if you know you're named in a suit in a liability claim, if the contractor's at fault and you're not on his policy, they're going through your limits. You know, all the additional insured does is, you know, you're not at fault, but even in defending, his company will defend you first. So if he has $1 million liability, they're going to exhaust his limits before they go after your limits. You're just layering more dollars in front of you, you know, and that's the idea, is to protect your pockets.
And who should be named on the builder's risk? I mean, I realize the builder's risk normally, whoever takes it out,
They are the
if
named
builder
insured.
takes it out, he's normally going to bill you for that anyways. It's going to be part of
Right.
the contract.
Correct.
And whose name should be? both-
If the builder takes out the policy, it will be in his name. He will be a named insured, but you can be added, you know, as an additional named insured or additional insured. And then also your bank's going to want to be listed as with a mortgagee clause.
And what's the benefit of that?
Well, it's basically, you know, if the contractor has the policy, so if you're additional insured, so let's say there's a loss while it's under construction or renovation, it's $100,000 loss. That check comes, the check will be made out in the builder's name and the homeowner's name, you know, and the mortgage company. So all three parties got to sign off on this, you know.
Yep.
And
Thank you.
that's really what you're trying to do, is protect that someone doesn't take off with the money and leave you hanging without the unfinished. That way, everyone kind of agrees. Sometimes it's tough with the mortgage companies because what they're really interested in is protecting the mortgage.
Mhm.
You know, so sometimes, you know, we even see that down here is, you know, in all these settlements is that, well, they don't really care if you're made whole. They just want the mortgage paid for. They want to pay the mortgage. Then whatever's left over, they'll let you have to do your repairs. And it's normally a big gap.
Which is why we tell people don't pay off your mortgage if at all possible.
Yeah.
Correct.
Let me go to the next slide. We'll let everybody take a deep breath.
Yeah, this is a lot to absorb.
Yes.
We appreciate you spelling it out in as simple terms as possible, Helmut. You're doing a great job.
Thank you.
Okay, we
I
kind
think
of
we
already
just covered
covered
this.
this. Yeah, we covered all of this. So the homeowner or the builder can take out the policy. Best practices would be the builder, who's going to bill you for it anyways, and you want to have your name added to it. The builder will know how much he took out the limits on, and therefore, if something is stolen above that limit, it reflects on him, not on you, because he set the limits. We've already covered this. So who
Right.
normally pays for the policy? Pretty much the consumer.
Right, the consumer's going to pay. If the builder buys it, he's going to build it into the contract.
Yeah. Helmut, what will void a builder's risk policy?
Yeah, here again, the builder walks away, he abandons the project. That's going to end your coverage. If the builder has the policy and the homeowner fires the contractor, that's where it becomes sticky for the homeowner, because the builder has the project and now you've terminated your contract with him. Your coverage ceases and ends the day you fire that contractor, if the contractor owns the policy. So that's something you want to be aware of if, you know, the builder has the policy. Or depending, you know, because like I've had builders that are doing a project and the homeowner, you know, terminated 2 different builders at 2 different times. And part of our agreement is that, you know, if we use a HBA certified builder, well, she was wanted to do the repairs herself, and I go, no, you're not gonna get the coverage. The company's not gonna extend that to you because it's outside the parameters of the policy. And it makes it very difficult. Once you're that far into a project, it makes it very difficult to get additional coverage on it,
Mhm.
or it's gonna be very expensive, because like I had, you're insuring at a higher rate. I know Zurich, once you're 3 months into a project, they won't take it. They don't want it, because there's too much a gap, and then people, it's just a mess. So you don't want to walk away from it. Once someone occupies the house, now in a total rebuild, once you get your occupancy permit and you put stuff in the house, that terminates coverage.
And what happens, this happened a lot in my neighborhood. What happens if the builder thinks he's going to get final occupancy? The inspector comes and says you have to do A, B, and C still. The moving truck's coming.
Right.
The homeowner says, well, I'm going to move stuff into the garage.
Right. In most cases, unless you have cleared that with your agent, you just lost coverage. Once you store stuff in the garage, your builder's risk is gone. It ends coverage. Now, you can get occupancy endorsements. My program, I give an automatic 30-day occupancy that, a builders are getting ready to go to closing, everything's ready to go. Now there's a hiccup with the finance company, the moving trucks are there. They can't move into the house, but they can put their stuff in the house up to 30 days. And then
will they have coverage for that?
Yes, not for their stuff, but the builder has coverage on the repair. Yeah, the contents you got to have on your homeowner's policy. The builder's risk will not cover stuff. It's strictly the structure coverage. It's building only.
Your homeowner's policy, which most people have because they just go to a liability, your contents would not be covered.
Correct. Yeah. So you want to make sure you got a homeowners in place.
So when you said property coverage earlier, it's the building materials property, not your personal property, right?
Correct. Well, it's anything that will become a permanent part of the construction. So your dishwasher, that would be covered. Any of your appliances, your stove tops, what you put in there, your gas ranges, those would all be covered because that's considered a permanent installation in the house. If you put in boxes with your dishes and glasses, they're not covered. So it's any part of the home.
So we have a few questions here, Helmut. Should the homeowner's name be added to the policy if the builder secures the policy, and why? And we've pretty much covered this one. We want both names on the policy.
Yes.
It should be added. You have that right since you are.
Right. You can tell them that you want to be added as additional insured on the policy.
Thank you. Question number 2 is, does builder's risk cover any liability at all?
Nothing. Strictly property. No liability coverage.
And question number 3 is, can I get builder's risk insurance if I reuse my foundation?
Yes, if the foundation is sound, and it really depends on the fire. Like we had some fires in Gatlinburg, and some of the foundations could be salvaged. They weren't damaged. It wasn't, toasted totally. So once they strip it away, they do some testing on the concrete. Integrity is still there. None of the pipes were damaged. Now they had some slabs. They had to tear out the slabs and rebuild it. But builder's risk won't cover slabs. Okay, and your homeowners normally doesn't cover anything below grade, your foundations and your piping that's below your foundations. So you want to check. Most of the time, 9 out of 10 times your foundation can be reused. It's still there and intact. It has, you may have to do some piping repairs and stuff like that, but a carrier may ask you, has it been tested or certified that it's, safe to be built on, that it hasn't lost any of its integrity. So it's really going to be up to the carrier, and you got to ask them, hey, we're going on existing slab. Is there a problem? Just ask them out front.
And with the wildfires we've had recently in the West, they've been so hot, very few foundations have actually
survived.
Had integrity. Yeah. Let me see. I think that, so let me go ahead and ask the 2 questions we haven't already addressed. So from Gwen Helmut, the question is typically what is needed to convert back into a regular homeowner's policy from a builder's risk? Like if you were with State Farm or Liberty Mutual and you converted, can you explain that a little bit more?
Yeah, so let's say you would State Farm, you had your homeowner's policy now, and they're gonna extend the builder's risk to you while you're doing your repairs. Then they say, okay, once it's done and we approve of it, we'll take it back into the homeowners. They're just gonna look for completion of construction and the occupancy permit. Once you get that permit and you say, okay, I'm gonna move back in, what is this, March 22nd, I'm moving in March 23rd. I want my policy effective then. They just want to know that you're moving into the structure and taking it back. They don't want a gap. If you say, okay, well, the house is done and I'm going to move in 45 days from now, they consider that vacant property. They don't want the exposure. They want someone living there because that lowers the risk of fire, theft, of everything if the home is occupied. There's someone there seeing what's going on.
And to piggyback on that, does it matter if there's a gap of a few days? I mean, do you want to?
Well, there's no good thing about a gap, so it may be a 2-day gap, but if the house burns in between, guess what? You gapped broke.
Well, no,
so
I mean it as in you put the homeowner's policy on it, but you're not able to move in for a few days or a week.
Yeah, well, you just, to the homeowners, they're going to tell you what, most of the time they're going to ask you when the anticipated move-in date is on the policy. You say, hey, I'm going to move in, we're going to closing and it's Tuesday, we're going to be moving this weekend. They're normally fine with that, and they'll just write the effective date when you start moving your stuff in. And that's what they're going to know. When I start putting stuff in, you may not be physically living there, but I'm putting stuff in the process of moving in. When you start putting your stuff in is really when you want your coverage to start.
Well, you
so
want
that your stuff is covered.
You want your coverage to start as soon as you get final occupancy, correct?
Right. Correct. Yeah, you want coverage when you're putting your stuff in there, when you're going in there, because once you start putting your stuff in there, here again, unless you got those endorsements, your builder's risk ends if it's in your name. So you want to make sure you don't, leave yourself in a gap situation.
I've got 2 more questions, kind of piggybacking on this piece. Narat had said her builder has provided the risk policy on the house, which covers the house structure and liability of their contractors, vendors, right? Her question is, does she still need liability on the rebuild house for other people? And can her current home owner's insurance cover just the liability for the rebuild house?
She's going to have to ask her home insurance, if while it's under construction, if her homeowner's policy is still in force, then she still has liability on that location.
Got it. And then, okay. And then Jonathan asked, he said they have travelers and they can get a builder's risk endorsement added to their homeowner's policy, which they have maintained for about $500. And so the question, is there any advantage to having this in addition to our builder having their own builder's risk policy?
No, because I mean, if there's multiple insurance policies on it, then you start getting into, because the carrier is going to ask, is there anybody else that has insurance? So let's say if you had if the contractor had a Zurich policy on it, you've got an endorsement on your traveler's homeowner policy for the builder's risk. Now the 2 carriers, they got to split the loss payment. All right, so now they're squabbling between each other. Because most of your policies say if there's duplicate coverage, like some policies won't pay at all, or they'll become secondary to the primary. So you really want to check the language, so if they have a homeowner's traveler's policy and traveler says, okay, well, you're going to rebuild your house, we're going to keep the homeowners intact and we can do a builder's risk endorsement for an additional $500, that's a great go. Just want to make sure that the course of construction expenses are covered on the endorsement the traveler's getting, but they're basically keeping your homeowner's policy intact for that value. And then you just want to see if the endorsement's picking up materials stored on site, things like that. But, and that's what, a lot of times with State Farm will do travelers, things like that, Chubb, they will just give you endorsement, builder's risk endorsement while you're under construction.
Got it. Mary has a question. Are there any issues with allowing her neighbor's builder to store that lot's dirt on their empty lot?
Yeah, I mean, the bad news is because now he's driving excavation equipment on their lot. And I'd stay away from that. Unless you have some kind of an agreement drawn up between you and that contractor that he assumes all liability. I would almost ask for a contract with saying, hey, yeah, you're doing this. Because the same thing too, though, he's bringing dirt in and storing it on your lot. Where did the dirt come from? What if it's contaminated or has pollution? He's now polluted your land. So those are things you really want to be careful of, because he said, well, I don't owe you anything. You don't have any agreement or contract. Now you've got to dispose of contaminated soil.
Can I add something to that? This is Lisa.
Yes.
There in my municipality, there have been several cases of this going on with a lot of problems. And the city actually is not even recommending that people do that anymore.
Right.
Even if they were doing it, or or signing a contract, basically just not doing it at all. So
Yeah.
I just wanted to add that.
Yeah, no, it's you open yourself up, like I said, they're moving dirt, the guy flips an excavator on your property. As a homeowner, you're trying to be nice and you're going to find yourself getting sued.
Well, thank you for that. And then the last question I've got in the Q&A is, does being an owner builder change any of your recommendations?
No, I mean, because if you're the owner or builder, if you're, and here again, assuming if you're doing that, you're acting as a general contractor, you just take out the policy in your name.
Is it harder to get one if you're owner builder?
Well, they're going to ask for, what's your qualifications? Like I know in my program, I've set up that one, you got to be an HBA builder. If I get a new builder, I got, if you've been doing it for less than 5 years, I need a resume of the contractor. They want to know what's the experience before they start building. Because even though it's peril coverage, it's the keeping the sites clean, it's security, it's knowing where to store stuff. It's all those little things, sometimes when you get a new builder or, the homeowner becomes the builder and they're not really sure what best practices or even what code things. You build a house, it's not to the right codes. Now you can't get your occupancy permit, and there's just a whole can of worms. So a lot of places it's not an issue, but they are going to ask you what's the experience of, of the contractor. Even like Zurich, if I'm taking out a policy as a homeowner, they want to know who my contractor is, his experience, what has he done, and they're going to check. I mean, I know when I get a builder submitted, to look at a builder, put in my program, they check experience, they check credit references, they check, have they filed claims, have there been complaints filed with the board of contractors. They want to know who they're insuring. They do investigate people.
Good information.
Can I just ask something really quick or follow up? When you said like how you can ask your homeowners insurance policy, like sometimes they'll put a rider or whatever you were saying to as essentially like a builder's risk policy onto your homeowners. I would just say from personal experience that I would look at that really closely, because my agent, and I'm in the Marshall Fire, my agent tried to do that on mine. And when I started asking more questions about what it covered and I saw what it covered, it excluded a whole bunch of things that my actual builder's risk policy does include. So I would just say, if you're going to do that, and maybe you can comment on that, Helmut, but be really careful, because I ended up canceling that and buying an actual builder's risk policy instead.
Right.
So
here again, and like I said, the builder's risk, it's property insurance, but it's on the inland marine form. And that's what I was saying. There's a lot of coverages, what they offer on the inland marine form that regular property insurance doesn't. So your homeowner's policy may not be as broad as what you want while you're under course of construction. And so, I mean, you have to ask that, well, okay, it's, here again, I'm just going to throw back the Travelers said they do a $500 endorsement. Ask them for policies, ask them for a sample of the endorsement. You want to see, I want to know what it covers and what it excludes. You know, when I look at a policy, I always go to the exclusion section first. I want to know what it doesn't cover.
Yeah.
You know, I start at what it doesn't cover, then I look at what it does, and then you can kind of get a pretty good feel like, is it worth it? Or do I need more? Do I, you know, because only thing you're trying to do with insurance is risk management. You're trying to mitigate your potential loss for a small amount of money, aleatory agreement, which is your premium, to get the most coverage you can get. You know, builder's risk realistically is pretty inexpensive for the coverage that you can get with it. So, because like that travel's endorsement, you want to make sure that it covers materials stored off-site.
Mhm.
You know, all those little things, because that, you know, you may save $500 on insurance and end up eating $10,000 on the backside saying, oh, I wish I'd done something different.
Thank you.
So the key is always an ask for samples of the policies. They will give that to you.
Nice. And just to clarify, because we've had this question before, builder's risk and course of construction insurance, those names are the exact same thing, correct?
They're synonymous. They run side by side, you know.
Thank you. So to be added to our mailing list, you can sign up to www.uphelp.org/signup. I believe that most of the people on this are probably already on that. You also can request a copy of today's slides or videos by emailing us. Stay connected to other disaster survivors. Our Survivor to Survivor forum, we have it once a month. People talk about shared experiences, what worked for them, what doesn't work for them. They give each other tips. We talk about the emotional support and what people are going through, whether it's triggers, and really nobody else understands a survivor's issues. Unlike another survivor, there is nobody else out there who can relate and really experience it and commiserate. So we have those, we have another one upcoming, and will be another month from now because we just had it last night. Colorado Division of Insurance, our mission is consumer protection. Here is their phone number. And these are Wildfire California Department of Insurance. If you have any issues there, they have a website chock full of information. And our next, well, this isn't quite right. So we do have upcoming roadmap to recovery events. This is not one of them.
Ignore that.
Our next one is on smoke damage, which is next week. Trying to get a little bit more clarity there. We also have an Ask an Expert forum. So if you get in a jam and we don't have an event coming up where you can ask us something, log on to Ask an Expert. And we have a variety of people who come through and read that, and someone will pick that up. It's not an overnight answer usually. It's usually a week or two. But we have people with eyes on it all the time, and hopefully the right expert can answer your question. Thank you to our funders. Without them, we wouldn't be here. I'd like to give a special thanks to Helmut for being our special guest tonight, because without him and his wealth of experience and knowledge and the fact that he's willing to voluntarily share all this with us, we wouldn't have this webinar. So thank you very much, Helmut. We appreciate it.
You're very welcome. My pleasure. Anything I can do to help, just reach out. Let me know.
Thank you.
Thank you.
On the backside, thank you, Lisa from Colorado, our liaison, and Valerie Brown, who is the mastermind behind all of this.
And the puppet behind the screens managing the yes.
So we appreciate all your attendance tonight. If you have follow-up questions, feel free to reach out to us. And hopefully this explains it all in a format that is understandable from the basic layman, which we all are. Everybody have a great night, and thank you.
Thank y'all. Bye-bye.